The rates came down.
Rates came down. I know. It's funny how it's kind of counterintuitive because the Fed's announcing that they're raising rates.
Yeah.
And everyone's thinking, oh my God, rates are going up, and they are for car buyers and credit card companies. But mortgage, the mortgage market really builds in expectations for what's going to happen in the future.
Right.
So they're concerned about inflation. The Fed says that they're going to raise rates. Everyone's expecting them to raise rates. They do raise rates, and everyone goes, good, they raised rates. And mortgage rates came down. And rates are in the high 4s and low 5s where they were in the high 5s and low 6s.
Right, because I think the banks were prepared for that increase.
Yeah.
So, like, they already built it into their pricing.
Yeah, exactly.
So when that finally happened, it wasn't like, oh my God, like it's the end of the world again. It's like, all right, well, it was happening anyway.
Yeah.
But I mean, I have like this mortgage app that I use, and it shows like, I don't know how real this number is, but it was like a number like 4.62.
Yeah.
I think on FHA.
Exactly.
And I'm like, oh, like we thought that we were going to see the dinosaurs before we saw that rate again. So I thought that was a good sign.
Yeah.
But the question is 2.25 ever going to come back?
I think, you can pray and hope that 2.25 comes back. It's probably not going to come back.
Yeah.
And if you're going to base everything you do on it coming back, you're not going to be happy.
Right.
But if you're going to base what you're doing on the reality of where we are today, and if it does come back, you're going to be dancing in the streets and you're going to take advantage of it.
I'm running, So what I heard, I think I heard this a week ago, they said guaranteed you're probably going to refinance next year. No matter what you get your rate for now, the rates are probably, they're not saying guaranteed, but they're saying it's very likely that the rates are going to be lower next year than they are right now.
Yeah.
Do you agree with that?
Yes, that is the expectation. And certainly going into 2024 when we have a presidential election, people are thinking rates are going to be down then too. So
I'm not going to talk about politics.
no politics, but we do think that rates tend to go up and down. And I've had some people that took a rate in the 6s. Yeah. And they're definitely refinancing next year.
Yeah.
So
we had one last week. I think they got 6 point something.
Yeah.
And there was a buy down, and the rate was probably even higher than that, which is scary. But it's just kind of what happened. So
it's tough.
Good. So you feel good about the market?
I feel very good about the market. I think that certainly you don't want to base a buying decision on a house on what the market is, because you buy a house because you want to live in a house. You expect to love the house, right? And if you see the perfect house, you don't want to be like, oh, I can't buy that one. I'm hoping now that something else is going to come. So
for me, I feel great about it. I think that there's more balance in the market. There's more inventory. The rates came down. Even when the rates were a little bit higher, there was still more inventory. So buyers aren't overpaying or paying above the list price like they were doing before. And it just feels like there's a little bit more breathing room. And buyers don't feel like they're being had as much as they were before. Sellers aren't rocking out as much anymore. But, they were kind of getting too much money to begin with, like last year anyway. So I think it just kind of gives everybody a little bit more of a fair chance. So that's what I think about it.
I think everything's looking good going into the fall. I think we're going to be very happy with the market.
Yeah, good. All right.